Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 Index, ticker symbol RUT, and I've left my lines on the chart, which, by the way, were drawn 2 weeks ago because 2 weeks ago I did a longer forecast because I saw all the momentum indicators shifting. And as I zoom in here, you'll see that this is the line that I drew 2 weeks ago, and it's almost as if the market followed my line. And this horizontal line right here is the role reversal support level that I drew, which started at this resistance point here. And the concept of role reversal is when resistance is broken, like we see right here, the resistance line reverses its role and turns to support. And as I record this on the 27th of September, you'll see today's low touch that line precisely. And what does that mean for next week? Well, there's a good chance that the Russell 2000 could bounce off of this newly established support level. So let me erase this line, and I'm going to erase my previous forecast line right here and show you what I expect to see next week, which is a bounce off of that support level. Now, this is a 1 week forecast that I'm drawing right here. The main reason is not just because of this support level, but if you look down here, the stochastics, which is the percent K, that's the blue line, is starting to hinge up. And that is currently in an oversold condition, as well as the CCI being oversold. I expect the CCI will also start to move up, eventually crossing this minus 100 line right here, which is the green line. That would generate a buy signal. So that's my forecast for the Russell 2000. Now, if we look at the spiders, that's ticker symbol SPY, you'll see I left my lines in place. Again, this was a 2 week forecast line. You could see that the end of the line right there is my target. And we actually hit that target low on Wednesday. Today, Friday, it went a little bit further than that target level. There's still a gap down below the market. So I think the S&P could actually drop just a little bit on Monday, maybe Tuesday, before it bounces. But I do think we're going to see a bounce just like that. The stochastics is starting to move higher. Eventually, if that continues the way it is, it will generate a buy signal. And I think that the CCI will eventually move higher and cross with a buy signal there as well. There's still that gap is going to act as a support level. So let me erase my lines here now that we hit our target. And I'll just leave this forecast line on the chart so that next week we could see how well the projections worked out. Now, let's go to the VIX. It's ticker symbol VIX. The VIX is inversely related to the S&P. I said it would most likely rally in an attempt to fill this gap. Look at that. Again, 2 week forecast. We had a bullish engulfing pattern, bullish engulfing pattern. Today we close with another bullish engulfing pattern. So I think the VIX is going to continue higher, just like that. And then I think once that gap is filled, we'll see the VIX start to move lower, which again is bullish for the S&P if the VIX starts to drop. Remember what I said with the S&P? I think we'll go lower Monday and Tuesday, and that means the VIX will most likely go up on Monday and Tuesday and then eventually pull back. You can see the stochastics is starting to turn lower while the CCI is still moving higher. So we have a little bit of a mixed signal here, and that's why I'm going purely with the technical forecast of that gap filling, because especially the VIX gaps fill 100% of the time. Now let's take a look at the Qs. This basically represents the NASDAQ market or the tech sector. And you can see that the Qs, as I zoom in here, hit my forecast, which was to the support level, which is a gap fill support level. And we started to bounce on Wednesday, but the 20-period moving average acted as a resistance point right there. So I'm going to erase all of these lines, and I'm going to project that the Qs are going to move a little bit lower on Monday and Tuesday, just like that. And then I think we'll see a bounce up to the 20-period moving average, which will, again, most likely act as a resistance point. So that's my forecast for the Qs. Finally, the diamonds. DIA is representing the Dow Jones Industrial Average. It's the ETF for the Dow. And you can see that the stochastics is starting to go up. The CCI is still going lower. Again, mixed signals. I think the Dow will drop a little bit on Monday and Tuesday, just like that. And then I think we'll see a bounce later in the week for the Dow because that gap is still open. And I think that is a good chance that the gap will fill, which means the market will most likely move lower next week, early on in the week, and then we'll see that bounce. Now, finally, I want everyone to know that I will be in Las Vegas next week, attending and speaking at the Las Vegas Trading Conference. I'll be joining my good friend John Najarian and his brother Pete from CNBC's Fast Money. I'll be speaking Friday evening or late afternoon, and that is going to be the last presentation of that Friday. And then I'm going to be sticking around on Saturday, most likely signing books and meeting with the public. And this Market Rebellion is a rebranding of Investitute. If you have a chance to get out to Las Vegas, the flights are cheap, the hotels are cheap, the food is cheap, and I'm expecting to have a good time speaking at that conference and meeting with the folks there. So hopefully you can make it. If not, that's okay. I'll still be around here doing my market reports and putting out my trade alerts each and every week for our members. So have a great weekend, and hopefully I'll see you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.